What's up, guys? It's Justin. I'm back with another video. And before I get into my stats for the week and the trade recap, I just want to say that I honestly started this YouTube channel not really expecting much. I just wanted a different way to document my trades because before I was writing journal entries and using screenshots from TradingView, but I wanted to switch to video format for my journal entries to help me review my trades better, to study my wins and losses, and really just document what works best for me over time so I can build consistency with my model. Obviously, I only have 30 subscribers right now, but I've been getting a lot of support, questions, requests, and encouragement. So I'm honestly thinking about expanding this YouTube channel from, more than just recaps and yaps to maybe like a course or at least a path for new traders to follow. And it would basically describe my journey. It would be like an intro to futures trading, what the markets are, how to read them, how to understand them, what prop firms are, how to trade them, the mental aspects of trading, like, discipline, risk management, psychology, all that stuff, which most people, honestly overlook and underappreciate. But it's, like I said in one of my previous videos, it's one of the most important and difficult aspects of trading. I'm still brainstorming a name for it, but I might just call it like Trader University or some shit. I don't even know yet. But eventually I would want to get into longer content where I really break things down for you guys and do like a deep dive on the concepts that I look for and trade on a daily basis and explain what works for me. So for now, I'm just going to focus on staying consistent with my recaps, building up these eval accounts, and continuing to document my progress with transparency and accountability. But yeah, let's get back into my stats for the week, and then I'll hop on the charts and show you guys my trade. So overall for the week, I'm at $945.06 on each of my accounts, which is $1,890 for both my accounts. The profit goal is $6,000 because each account has a $3,000 profit goal, so $6,000 in total. But for today, I ended up with $428.56 from one trade. Topstep dashboard is going to say 3 trades because I ended up scaling out of my position, taking partials, and I did that twice, so it's going to say 3 trades. But in reality, it was just one. Like I said, Topstep breaks up the trade into 3 different trades if you take partials. So it's only going to show an average winning trade of like $142 and my best trade at $162. But again, in reality, it's all one trade that I ended up making $458 off of. So keep that in mind. But the entire trade was only 6 minutes and 14 seconds long before I hit my full take profit. And really good day, honestly. I was very proud of the execution that I took. I was rewarded for being patient because I ended up missing a really clean unicorn model that went for, I think 90 or 100 points that a lot of people ended up taking. I was busy though. I didn't see it. I wasn't on the charts, so I ended up missing it. But I was staying patient. I didn't want to overtrade or anything like that. I didn't want to, not really revenge trade because I didn't lose a trade, but I didn't want to FOMO trade, because I had missed out on that trade. So I just wanted to stay patient, look for my model, look for a clean and clear delivery in the direction that I wanted price to go towards my draw on liquidity. And I ended up getting that off of a breaker block. So I'm going to hop on the charts in a second and get into that. But if you remember earlier on in the week, I think it was Wednesday, I had a losing day because I had missed out on a couple of clean trades and I had FOMO. I was being impulsive, impatient, and just way too eager to trade. And that led to me ending the day with negative 77, which sucks, but it could have been way worse, honestly, if I didn't have good risk management. And then on Thursday, I had a green day overall with $91 of profit for both my accounts, but I could have ended the day with $450 on each account. So $900 in total. I didn't take partials where I should have. I was being way too greedy. I wasn't really managing my position that well. And all of these are things that I kept in mind coming into today. So I really did a good job of managing my position, taking partials where I needed to, and also just having a clean draw on liquidity that ended up getting hit in, again, 6 minutes and 14 seconds. So let's get into the recap though. This green line is to signify the New York market open price. So again, on the higher time frames, because I'm not in replay trading right now, it's going to show price delivery for the entire day, which obviously shows a delivery all the way down to 22,776. Well, 790, sorry. But again, at the time of my trade, at the time of me actively being on the charts, price was around here. So on the daily time frame, we were outside of this bullish gap, and it was looking like we were probably just going to inverse it for the day, but obviously there's no way for me to tell that. So I had that marked out, and I also had, no, not on this time frame, the 4-hour time frame, there was another gap that we were going to trade out of shortly. So I marked that out as well. We have this gap right here that we were trading into. It did end up getting inversed, but I was still looking at it because, as you can see down here, we created some clean rejection blocks. So I was like, okay, price is most likely going to come down to this area in general and most likely bounce back up. And that's exactly what I did. I took a trade when price came down over here and it went back up. But let's continue with the top-down analysis, going through the time frames. I'm going to get rid of this rejection block though. So again, price is around this area. We're looking to the left to see if there's any fair value gaps and imbalances where price currently is. And on the 1-hour time frame, we have this fair value gap that we are literally trading into. So as you can see, we're in a few different PD arrays on the different time frames, and it really comes down to being able to tell where price wants to go and how it's going to react to that imbalance. I'm going to delete these for now though. I'll actually leave this one up. I believe this one was the 4-hour fair value gap. Yes, I'm going to leave that up because I think we traded into that for my trade. I'm going to scale down to the 1-minute time frame though. And at market open, we came up real quick for some manipulation, and then we swung downwards for a lot of points. Let's see. Yeah, almost 300 points. That's nuts. So we were coming over here. I was initially looking for trades to the upside to trade a reversal. I didn't like price delivery out of here though. We did have a change in the state of delivery with this candle. That also was a fair value gap, but price didn't trade into it, so I was not looking to take any longs. With these types of models, I would only want to take this trade if price is going to tap back into that fair value gap and respect it. That didn't happen, so I did not get an entry. And also, if you look to the left, what do we have over here? Oh no, sorry, wrong candle. My bad. So if you look over here, we have a breaker block. And I'm going to extend this out for a reason. I'm extending this out all over here for a reason. So a breaker block, and this one is a bullish breaker block. So keep in mind, in bearish price action, in bearish order flow, we're making lows, lower highs, lower low, lower high, a lower low, a lower high, a lower low. Well, this one wasn't a lower low, but we're still continuing with bearish order flow. A lower high, a lower low, and this was actually the lowest point before we disrespected all of these protected highs to come up for bullish order flow. So on the way down in bearish order flow, what are we doing at all of these internal highs? We're engineering liquidity. We're engineering liquidity that price is going to trade back to, that price is going to target, that price is going to hunt. And if you can see at all of these, all of these engineered liquidity points, we're sweeping them. We're breaking through them. And we come up to almost pretty much this one up here, which was pretty high. That's, like I said, a couple hundred points. So the market is always going to be doing one of four things, guys. And being able to tell which one of these four things the market is doing will help you add conviction to your trade. It will help you find your draw on liquidity, and it will help you have a good entry. So first thing the market's always going to be doing is hunting liquidity. Second thing, rebalancing inefficiencies and imbalances. 3, it might rebalance price to equilibrium. Oh my god, I can't type. Or 4, it's going to generate liquidity. So, in bearish order flow, like the one I showed you above, we have a high up here, we make a low, we make a lower high, and a lower low, a lower high, and a lower low, a lower high, and a lower low. And then, price might all of a sudden come back up. Actually, I'll probably do here, to sweep some of these points of liquidity, retest, and then continue to sweep the rest of the liquidity. So on the way down, we're hunting liquidity. We're sweeping liquidity on the sell side of things from earlier. And these red lines will be liquidity that got swept, I guess, from, earlier on in price action. And then boom, the lowest low should be our external range liquidity that ends up getting swept. Sell side ERL. So this would be our external range liquidity that ends up getting swept before price reverses. So while the market is hunting liquidity though, it's coming back up to retrace and make these lower highs. And what is it doing then? It's generating liquidity to be swept. So I'll make these red actually. Same thing as these ones. So all of these internal highs that we're putting in are generated liquidity. We call that engineered liquidity because the market is literally engineering liquidity. And so I'll actually make these green, just so we can have them a bit of a different color. And then I'll actually make this line black so it's a little easier for you guys. So the black is price action. The red is liquidity that we swept and hunted out as a step 1, or one of the 4 things. They're not really steps. They might not be in this exact order, but the market is always doing one of these 4 things. The green things will be engineered liquidity. And I'm actually going to make this line red so it matches with the other ones. Sorry guys. But on the way down, we're engineering liquidity. What I'm expecting to see if we have a reversal is for price to come back down after sweeping external range liquidity, come back up, take out some of this generated liquidity, but not all of it, come back down to retest maybe a breaker block that is at this point, and then come up to take the rest of the liquidity and start bullish order flow. And with bullish order flow, it's the exact opposite. We start from a low, we make a high. We have a higher low and a higher high. Higher low, higher high. This would become bullish order flow after we sweep external range liquidity. And ideally, when we sweep external range liquidity, we want to be trading out of a high time frame PD array. So like I said, when I was doing my top-down analysis earlier, I was showing you guys to the left, we were trading out of imbalances. We were trading out of fair value gaps. This could be a 4-hour fair value gap, a 1-hour fair value gap, or a daily fair value gap. It could even be a 15-minute fair value gap. Sometimes 5-minute fair value gaps have really strong rejections. But regardless, we want to be trading out of a imbalance on the higher time frame when we sweep this external range liquidity. And then once we sweep that external range liquidity, I'm scaling down to the lower time frames, like the 1-minute time frame, to look for an entry, to look for confluences, to look for specific breaker blocks at these points in time, to look for maybe a change in the state of delivery, to look for a fair value gap that displaces, etc. So let's go back to our price action on Friday, which was honestly beautiful. And what happened? Exactly what I just drew out. So we're coming down. We're making, our lower highs, our lower lows. Boom, boom, boom. External range liquidity over here. It didn't necessarily get swept because we didn't have any price action from the last few days, but it was from a few weeks ago. And we were also trading out of those imbalances, like I told you. So we come back up, we sweep a couple of these liquidity points. We come back down to retest the breaker block. And then, we're still retesting the breaker block. And then we come back up finally to sweep this liquidity that never got swept before. Oh my god, my magnet. So we bounce off the breaker block and we sweep up to take out liquidity. So for my trade, I was being extremely patient because I missed this first entry. Let me delete this line now. I missed this first entry. Well, I didn't really miss it, honestly. I just didn't like it. We, again, didn't trade into this fair value gap. So I wouldn't have taken that trade to the upside. We didn't inverse any fair value gaps. The change in state of delivery was pretty weak, but it still had a pretty decent move. Overall, that's just not a trade I wanted to take. I saw how price reacted to this breaker block when it came back down. Because again, where is it? In this model, we're expecting price to come back down to these breaker blocks and go back up. But ideally, you want to wait and see how price reacts because price might continue down through this and make a lower low. So ideally, you want to wait, see how price reacts when it first tests the breaker block, and then trade up. So I saw how it reacted. Well, it barely wicked into it. It came back up, so it didn't really show the strongest sign of reversal. It came back down, and when it came back down, I was specifically watching to see how price would react. We wicked into this breaker block, this 958 candle right here, and what I was looking for was a change in the state of delivery to the upside. So once we had a change in the state of delivery, which was right here, this candle, I'll actually extend this out because the change in state of delivery means that the candle closed above the most recent swing in the opposite direction. So for bullish candles, our most recent swing was over here. The top candle is right here. And our change in state of delivery would be a bullish candle closing above the top of this candle body. So this is our change in state of delivery line. And the second we displaced above these candle bodies, we didn't displace above the high though, but we displaced above these candle bodies, indicating a change in state of delivery. And I pressed buy. My stops were, I believe, right at this swing low. And I targeted internal liquidity for a 1 to 2. I think it was right over here. No, I targeted this imbalance actually. So we have an imbalance right over here. And I just targeted the tip of that. And I actually changed my stop to have a 1 to 2. So I was 22 points and I believe just about 46 points of profit. So I entered again off the change in state of delivery. Price retraced a little. I almost got stopped out, not gonna lie. But then we shot back up within 5 minutes. And boom, I was in. Oh, also I entered off of the close of the candle, so my entry was like probably right around over here. Like right over here. But yeah. So very clean entry. Again, I hit CP in 6 minutes and 14 seconds. And what I'm doing, because again, in any single, bearish order flow, we're generating liquidity. Same thing with bullish order flow. We're just generating sell side liquidity. But in bearish order flow, we are generating buy side liquidity. So all these points of liquidity especially equal highs. Equal highs are really strong points of liquidity. Like these are these are relative equal highs, we would call them. The green line will be my final take profit. When we're coming up here, the second we took out this first engineered liquidity point, I immediately took out partials. So I had entered in for, I believe it's 6 micros. I'm just gonna like basically replicate that. We'll do a buy stop real quick. Stop loss was down here. I risked just about $300. Take profit was up here. I think my entry must have been a little different though. I probably am off by like a point or two because I would have made 546. Oh, actually no, that's because I took partial. Sorry about that. So on the way up, once we passed and swept this first point of internal liquidity, what did I do? I took out three contracts with a sell limit. So on the way up, it hit the sell limit and it took out 3 of my contracts. So I secured profits with 50% of my position. Once we swept this second one, I took out 2 contracts with a sell limit. So by then I was out 5 of my contracts in profit. And I left 1 as a runner just to this imbalance to see how it would go, and ended up hitting TP. I didn't want to be too greedy and target a higher move because I wasn't sure if this fair value gap would get respected or not, especially because the first move out of the breaker block was not too strong. So I really expected price to tap back into this fair value gap and honestly probably just come back downwards, but it continued up and then went down. And why did it continue up? Because we were sweeping this generated liquidity from earlier that never got swept with the initial move. Once it swept that, it came back down, it retraced, it retested this line of liquidity, it swept internal liquidity at this high that we put in, and then it came back down. So my trade was off of the breaker block retest to come back up for generated buy side liquidity. My take profit was this imbalance. And again, I hit TP in 6 minutes and 14 seconds. So overall good trade, very good risk management, very good position management as well during the trade, where I was taking partials to secure profit because I didn't want to have another day like Thursday where I just get stopped out at break even, or I don't hit my full TP, or I don't have any partials or anything like that. So I really wanted to secure some profit. And again, the full move, if I had stayed in with all my contracts, would have been $550. But because I took partials, it was only $458, I believe, which I'm 100% okay with doing that. Where else can you make $458 in 6 minutes? I'll wait. Once I hit that TP, I was happy. I locked my account for the day, and I was done with my trading. So, overall good setup for the day. Again, I'm proud of the execution. I'm proud of the risk management and the position management that I had during the trade. And I'm going to come into next week with a similar mindset, trying to overcome greed, trying to overcome my psychology, and just doing a really good job of being able to take good trades. So I'll be back with more recaps in the future. And I also, like I said, might start recording some of that course. So we'll see. I did an Instagram poll where I asked people if they would want to see a course, and I had a really, really good response from everyone. I had like 50 people voting yes. One of my friends voted no to be funny, but pretty much everyone said yes. So I'm really, again, appreciative of the support, and I'm going to do my best to try to get that out for you guys as soon as possible. But have a nice weekend, guys, and thanks for watching.